You're welcome back. If you've just joined us, you're watching Business Incorporated. We're live to you from Channels Television, broadcasting from Lagos. Let's now take you to the fixed income markets. Let's see how the numbers are doing for Tuesday's trading session. Femi Akinyemi is a fixed income dealer with Access Bank and joins me on the program. Femi, thank you so much for your time.
Good afternoon. Thanks for having me.
Good afternoon. Quickly take us through the numbers. How are the treasury bills and also bonds trading doing today?
Okay. For the fixed income market, it's been a very slow start to the month of November, particularly for the bond market. What we've seen so far is just a turnover of less than 1 billion, and most of the maturities are currently trading at where they opened. So basically, it's been a flat market in the bonds market. However, for the treasury bills market, open today, there was a bit of buying on the short end of the curve. That's the November to December bills. And we saw yield drop by an average of 10-15 basis points. However, after the announcement of the OMO auction by the CBN, which was expected due to the maturity that will come into the system on Thursday, what we saw was an increase in yield on the long end of the curve, particularly the 1 year, from around 18.35, 18.4 to as high as 18.6. But generally, it's been a very, very quiet market.
Why do you think we have a slow start? Just 1 billion naira, it's quite a small amount of money for the whole bond market. Are there developments that is taking a toll on the market?
Well, I think one of the factors that led this is the continual OMO auctions, the flood of OMO auctions. In the last 1 week, we've had auctions almost on a daily basis. And aside that, the level of liquidity in the market has dropped, which is in response to the OMO auction, coupled with the CBN forward sales, which we expect should happen this week. And then generally, we haven't also been seeing much from the pension funds, and they are a major player in the market. So all of these factors basically has led to where we are currently.
So what is the yield at the market?
Well, like I said, for the bonds, yields on the long tenor are still around 15.4, 15.5, while for the treasury bills, because of the series of OMO auctions, the short end of the curve is trading around 16.5 to 17.5, while the long end, the medium to the long end, is trading around 18.3 to as high as 18.6.
Okay, so what is the outlook for the markets? We have 3 more days to trade.
Well, we expect activity to pick up. I mean, being a new month, we expect to see the pension and the pension funds and the asset managers come back to the market, especially at the T-bill markets. I mean, the yields are attractive at the 223 levels. We expect to see them coming into the market. So we expect market activity to improve in the course of the week. And basically, yeah.
All right, thank you so much, Femi Akinyemi, fixed income dealer with Access Bank. Now, Sub-Saharan African economies should consider increasing taxes and removing subsidies to improve growth. According to the director of IMF's African Development, Abebe Selassie, Africa's economy is experiencing its weakest growth in nearly 2 decades. 2016 growth was forecast for 3%, but is now expected to fall to 1.4%, owing to a drop in commodity prices.
African exporters of oil and commodities should remove subsidies and boost taxes to weather the slowest growth in more than 2 decades. This is according to the International Monetary Fund, which cut its 2016 growth forecast for sub-Saharan Africa by more than half to 1.4% from an initial forecast in May of 3%, as economies reel from the impact of the drop in commodity prices. Abebe Selassie, the director of IMF's African department, said growth could start to recover next year to 3% only if the battered economies carry out fiscal reforms.
You know, the key for us really is, the key risk is really whether or not countries will go ahead and do the required fiscal adjustment. Should they fail to do that, I fear vulnerabilities will heighten, and the crisis and the weak economic performance we've seen so far could get even more difficult.
Economies grew more than 5% in the decade, leading to the commodity price drop, but it is now being dragged by 23 resource-dependent nations like Nigeria, South Africa, and Angola. Average growth was 3% last year. Others that are more diversified, like Rwanda and Senegal, will continue to grow at more than 5%. Nigeria, which is in its first recession for more than 20 years, has been seeking to widen its tax base to offset lower revenues caused by the slump in oil prices. Selassie said its low debt would make recovery easier.
Now, the good thing for Nigeria is they have a fairly low level of debt. So Nigeria is a country where if you have a coherent and consistent policy package, it should be possible for them to to get financing to support a gradual and smoother adjustment path. So the low level of debt in Nigeria is a source of strength. But but urgent action is needed because the economy is already in recession this year. That's why we're calling for strong action as soon as possible.
Zambia, which has been hit by lower prices of copper, could save more money by eliminating fuel subsidies.
The fuel subsidies take up a huge amount of government resource, and generally also they tend to be very regressive. Okay, so the best way forward in addressing this really is to, the extent possible, to eliminate these subsidies and put in place social protection programs for the people that will be most affected by the removal of subsidies.
Selassie said African nations needed to balance commercial debt like Eurobonds with other cheaper forms of financing from development institutions. Several nations have made debut Eurobond issues in recent years, but the pace has slackened off.
And finally, on Business Incorporated, Zambia's economy should grow by 3% this year, largely unchanged from last year, as electricity shortages and subdued private sector investment weigh. Now, this is contained in a forecast by the International Monetary Fund for 2016. The economy expanded by 2.9% in 2015. The IMF mission chief to Zambia, Sidi Sikata, said resolute policy actions such as the removal of fuel and electricity subsidies could help Zambia overcome its economic challenges. Zambia began talks with the IMF in March about a potential aid package after agreeing the budget deficit was not sustainable. The government hopes to conclude a program with the IMF in the first quarter of next year. And Finance Minister Felix Mutati said that Zambia must be prepared to endure economic pain before any gains are felt from an IMF aid program. And with that, we've come to the end of today's edition of Business Incorporated. Thank you so much for watching. I am Bolaji Akiwale.